Hello everyone, welcome to Educative Newsroom where we give you the most insights into national activities, teachers fronts, education fronts, anything you can think about. Kindly subscribe because we are going to stay on these pension schemes until we exhaust every aspect of it. We have actually done some other videos about tier 1, tier 2 in our previous videos. You can check them out. But for today, we are going to look at the effect of tier 3 pension on your net salary, your income tax, and even your affordability. So these are the three things we will be looking at. Now, as you are all aware, just for a background, pension used to be paid solely by SSNIT. They will give you a lump sum payment and they will give you monthly pension. But upon trend analysis of results achievements, arguments have been made that SSNIT could be improved through the introduction of the 3-tier system. So for now, SSNIT pays only the tier 1, which is the monthly pension. Now, part of the money that used to go to SSNIT is now given to private sector managers to manage, which is the tier 2. That's the lump sum payment. These two pensions, tier 1 and tier 2, you do not have to make any extra effort for it to be deducted. Pension contributions that used to be done before the introduction of the 3-tier system continues with just some few modifications about the increase in the deductions. So those deductions, they are automatic, compulsory, they are done already. Cumulatively, it's about 18.5 that is being deducted. 2.5 goes to National Health Insurance Scheme, living with that's about 15%. Yes, no, that's 16%, sorry. Because 18.5 minus 2.5, it will be left with what? 16%. Now out of that 16, 5% goes to the lump sum pension managers, and then 11% goes to SSNIT to manage to give you your monthly pension. Now this is the tier 3 or the third tier. This third tier, it is a voluntary contribution. It is a voluntary contribution. You need to sign up for it. Every worker unions, they have their own tier 3 managers. Every worker union have their own tier 3 managers. The tier 3 managers for NAT is United Pension, and the name of the tier 3 is Provident Fund. NAGRAT have theirs, CCT have theirs. I do not know whether Innovation and others have theirs yet, but other unions have the opportunity to roll onto that of NATS and maybe CCT or NAGRAT. Now, what happens when you decide to do this voluntary contribution? It is going to have effect on your income tax, your net salary, and your affordability. These three things are going to be affected. Now, what does this tier 3 work? Or what is the benefit? The main benefit for this tier 3 pension is that you will not be taxed on any amount you decide to contribute. Just for an example, you can decide to save money regularly into your savings account, treasury bill, and then others. But before you get these monies into your bank account to save into treasury bill, fixed deposit, and the rest, it would have been taxed already. However, if you decide to contribute this money into the tier 3 pension, this money would have been deducted already before taxation is applied. Now, what is this tax amount that you are avoiding or you will not be taxed? Usually, most government workers, public sector workers, their last batch of cash that needs to be taxed falls within 17.5%. So as a rule, general rule, it is taken that you will be saving 17.5% tax. So instead of taxing you 17.5 on any amount you decide to tax, that amount will not be taxed. So let's take an example as well. If you decide to save 100 Ghana cedis, that 100 Ghana cedis will not be taxed. So this goes straight to your tier 3 managers. What it means is that if you decide to collect these 100 cedis to be added to your net salary, government would have taxed it 17.5, meaning that this 100 Ghana cedis, you cannot collect it in your bank account. You would rather be given 82.5 Ghana cedis, whilst government takes 17 cedi 50 pesos. So it is a question of you saving 100 Ghana cedis or you take 82.5 Ghana cedis. The choice is yours. Now, if you decide to save, what it means is that you are indirectly or directly claiming 17 cedi 50 pesos on every 100 Ghana cedis that you contribute. So you can imagine every month you are collecting 17 cedi 50 pesos. This is an amount that can be channeled into what? Insurance premiums. In other words, you can consider it as your insurance premium that you are contributing every month. So that is one benefit. The residual benefit also is that the money that you are saving to the pension fund managers, the tier 3 pension fund managers, they will be investing the money. So they will not just be investing the 82.5 Ghana cedis which you would have collected into your bank account. They will also be investing that 17 cedi 50 pesos that you were not taxed as well. So what it means is that government is giving you 17 cedi 50 pesos on every 100 Ghana cedis every month. And this 17.5 Ghana cedis will equally be invested for you every month. So it's like interest on your tax that government has given you. Alright, so that is the benefits. Now let's look at the effects. The effects of this contribution on your income tax, your net salary, and then your affordability. Now, what it means is that anytime you decide to save an amount, for instance, 100 Ghana cedis, your income tax will reduce by 17.5% of the amount you are saving. So in this case, if you are paying, maybe your income tax is 301 Ghana, 310 Ghana cedis. Or let's take it again. If your income tax is 317 cedi 50 pesos, and you decide to save 100 Ghana cedis, your income tax will reduce to 300 Ghana cedis. That 17.5 Ghana cedis on it will come down. So your income tax will reduce. Also, your net salary will equally reduce. Your net salary will equally reduce because whatever money you are saving into your tier 3, it is only the tax component that is being dashed to you. The rest of the components will also be taken from your net. So your tax component will reduce, and then your net salary will equally reduce. So like I said, if you are saving 100 cedis, your income tax will reduce by 17 cedi 50 pesos, and then your net will also reduce by 82.5 Ghana cedis. So 17.5 from here, 82.5 from the net. In other words, if you are saving 200 Ghana cedis, your income tax will reduce by 35 Ghana cedis, and then your net salary will reduce by 82.5 times 2. That's going to be 165 Ghana cedis. Alright, so now let's go back to, we have seen the effect of the contribution on your income tax and then the effect on your net salary. Let's look at the effect of it on your affordability. Now, affordability is your excess or the space that you can use, the space of your salary that you can use to pay off any loan or anything. So any money at all that is deducted from your salary is considered as a takeaway from your affordability. In this case, anytime your net salary reduces, your affordability will also what? Reduce. So when you decide to sign up for the tier 3 pension, one, your income tax will come down, but the amount that it is reducing by will not be given to you cash. It will be sent to your tier 3 managers, and then your net salary will equally reduce because the money you decide to contribute is only part of it is taken from your income tax and the rest is taken from your net salary. People have the wrong notion that when they sign up for this, maybe when they sign up for the tier 3, their net salary will rather increase because the tax is reducing. No. Even though your tax will reduce, that money is not coming to your pocket. It's not coming to your net. It's going to the tier 3 fund managers, and equally the rest of the deductions will take place from what? Your net salary. And that means your affordability will also reduce. We will be looking at in our next episode what happens when you decide to do partial withdrawal from your tier 3 pension. What happens? What are the implications? Kindly subscribe so that when that video is up, you'll be one of the first people to see it, or anytime we share, you see the notification, you will get it. Bye bye.